Most traders don't wait for lower time frame confirmation to actually confirm trades. And what that means is they're getting involved way too early, getting stopped out too often, and it just starts to eat away at your confidence to the point that you just get rejected or feel rejected. So what I want to do is show you exactly how to get into high probability swing trades using lower time frame confirmation in combination with higher time frame bias. And I'm going to walk through step by step how to do this on Euro USD. Then we're going to look at some theory and cover another example using silver. So let's get into it. So the first thing that we want to do, irrespective of price action, is combine timeframes. So I'm looking at the 12-hour time frame, and I'm going to overlay a 2-week candle to understand how is the 12-hour acting in correlation with the 2-week time frame. And you can see we have a very bullish push up during this 2-week period. Price then liquidates the high and starts this downtrend. I'm just going to pick up price right here. So what is price doing? Essentially, it is liquidating or breaking out below a previous 2-week candle's low, raiding the external range liquidity at this point here. We have internal range liquidity within this price leg, fair value gaps, an order block, and so on. What ends up happening is we create a new price leg higher, we retrace into the newly created internal range liquidity in this price leg, and then we break above the high, creating a new price leg. So what we have done is understood that we've both raided liquidity below this low, we're coming off bullish price action, and we have lower time frame confirmation creating bullish price legs. So we can simply enter using internal range liquidity. And I'm just going to show you exactly how to do this. So right in this price leg here, we have the order block. So the order block, which I'm marking as the 12-hour order block, is the last sell candle before the buy. We also have, if you look right here, between candle 1, the last down candle, and candle 3, the creation of an imbalance, a bullish fair value gap. So we can mark that in green. So we have lower time frame confirmation, we have the creation of an order block with a fair value gap. So I'm just setting my entry at the fair value gap, covering the low of the order block, which acts as our swing point, and then targeting the high of the candle that we're manipulating. So price is raiding below this candle's low. We've seen lower time frame shifts and confirmation to get into our trade, and then we can naturally just target the opposing end, the external range liquidity that sits at these highs, and that plays out for a perfect 2-hour trade. So let's get into some very quick theory. What is lower time frame confirmation? Lower time frame confirmation is waiting for price action on your execution time frame, so the 12-hour time frame that I just looked at, to validate higher time frame bias, which would be in that case the 2-week candle. Most traders analyze on monthly and weekly charts. They identify premium or discount zones, and they're just entering on maybe the daily chart, but they don't understand the correlation between the higher time frame and lower time frame entry. This results in premature entries, stop hunts, and just taking unnecessary losses. And why does this matter? Because higher win rate and higher RR multiples are possible if you enter with lower time frame confirmation. So let's see how this plays out on silver. And we see the exact same thing happening here. So we have the 12-hour time frame with the 2-week candle behind our price action. And what we see is that price raids the liquidity at this specific low. So if we zoom into price, we can see price sells off and raids the liquidity that sits below these candle ranges, these two-week candle ranges. We then get a shift, and we're waiting now for lower time frame confirmation to tell us to go long, to target the high that we're now manipulating. So we get a retracement, price trades back into this internal range liquidity, but actually just disregards it. It's just very bullish price action. So this is giving us lower time frame confirmation. This 2-week candle is also about to close, and we have the formation at this point of a 12-hour order block. So again, I'm just going to mark this last sell to buy. So we have context, higher time frame context, and we have lower time frame confirmation. So we can now place an entry right here at the order block, and we can take our stop and we can cover anywhere in this area really, but I like to cover the low of the order block, and then we can target the high. And this turns into a massive 5R trade. Yes, you have to deal with some drawdown, but eventually this plays out perfectly. And before we move on, let's look at when this doesn't work. So if we just pick up price right here, we have a sell-off. So what we're really expecting is for price to come in and after confirming, fill this internal range liquidity and then continue lower. However, if you actually think about the objective of price, what is it now doing? We previously looked at liquidation of highs. What price has done is it's liquidated or raided the external range liquidity above this candle range's high. Then we get our shift, our lower time frame confirmation. And now, where is the objective for price? It's the external range liquidity at this low. So price has to sell off to this exact level. However, once it's done raiding this liquidity, we have to remember we're in a bullish market. So price has achieved its objective. So when we're looking for confirmation in this area, we can have very strong confluence or confidence that price wants to go higher. So that's why you can then wait for your lower time frame entries to take trades towards the high, and why you wouldn't want to actually start shorting this market. So let's just finish off with a quick bit of theory on how to apply this. So first and foremost, establish your higher time frame bias. You have to have a good view of what points of external range liquidity are being raided, and they sit at higher time frame candles. Wait for liquidity sweeps, so wait for liquidations of that external range liquidity at key higher time frame levels. Then wait for lower time frame confirmation. We need to see internal range liquidity forming within price legs in the direction of our trade. Then enter with our stop loss covering lows or liquidations. And I'm going to do a whole nother video on exactly that. My model is that I track and analyze 32 Forex pairs, including gold, silver, Bitcoin. And I'm tracking 12-hour price action in conjunction with monthly, 2-weekly, and weekly candles. And then I just execute. Once you get good at this, you can do it in 10 minutes a day. I promise you. So for more content like this, just subscribe to my channel. I'm going to be releasing videos on absolutely every aspect of trading. And I've got a course coming as well. So please stay tuned.